Clovis Oncology, ticker CLVS. It is a top idea in the marketplace service. Let's see. It is the BioBoom portfolio, so it's still very speculative. Our buy target, or buy threshold, was at $2. Buy 1 was at $75, and I believe buy 2 was at $55. I put orders in at under the buy threshold, and then also at buy 1. So I got my average down below $1. So I'm enjoying this move. I was up over 200 something percent a couple days ago, I think it was. But I am struggling at the moment to determine, do I stick with it? Do I sell some right now and then wait for our sell 1, sell 2, and sell 3 prices to get rid of the rest? I did have to average down. Obviously, if I was buying into that selling pressure. So I'd like to unload some to regain that house money position, and that'll allow me to hold for the long term through, sell 3 and then for years beyond. Anyway, let's get into the company though. Clovis, like the name implies, it's an oncology company, small cap, very speculative, biopharmaceutical company. The company is essentially right now like in 2 different. It's got Rubraca, which is a PARP inhibitor, and then they have their targeted radionuclide therapeutics. That's something they made a deal about, I think 2 or 3 years ago now. I believe it was 2019 when they made a deal with 3B Pharmaceuticals for it's licensing for these. So they don't own it essentially, but right now they have their lead compound, you would say, in that portfolio, which is FAP 2286, and the FAP means fibroblast activation protein. We'll get into that in a little bit, but that's the 2 things that this company's working on. Actually, let's see if we can get the pipeline up. There we go, right there. So this is Rubraca, different ovarian cancer. We'll get into that in a little bit. And then this is there's a FAP 2286, and then looks like they got some other preclinical and discovery programs going there for more of these, which makes sense over the last couple days or last couple weeks, that both Rubraca and their TRT pipeline has got some decent updates that have moved the ticker, but also kind of validating the company's efforts and what they're doing. So first, let's go over what else we got. So they had the Rubraca, gave us some data on Rubraca. They gave us some data on the TRT. There's been some buyout chatter. Sanofi's potential suitor kind of makes sense in a way. We'll get to that in a little bit. And then the reverse split is off. So shareholders voted down the reverse split. So 4 positive catalysts for the share price. So that's how we get this move, because I think it was, right? Yeah, so we have this. I think this was ASCO, and then following ASCO we had the FAP update, and then solid spike on some potential Sanofi buyout, and then recently in the last few days we had the update on the reverse split. So setting us up, we got almost like a little cup and handle going on here. We'll see if that actually leads to anything. But all right, so general background on Clovis. How did we get this, sell-off that's been going on? I mean, most of this, I would say, over the last year has been just the idea that February 2021 was essentially where most of these small caps and most of biotech and even healthcare had a high. After the whole COVID, healthcare was doing great, especially the small guys were speculative. Everything was rising up, even if they really weren't doing anything. But ever since, February last year, it's been a pretty consistent selling pressure. You get your spikes, but it's a general grind down. Clovis they burn through cash, so they have a lot of debt. We'll get into that later, but Clovis needs the fundamental story to change dramatically, very quickly. Now, is there hope from the data? Yes, but the hope is probably not going to lead to an immediate turnaround in the company's revenue, but it does set up the idea that these guys might be worthy of a buyout considering the current M&A environment right now. There's a lot of companies out there making deals. Seems like almost every day we're getting some of them being small and some of them being pretty big. So it would make sense. Clovis has been a frequently referenced buyout target, and I think between the new data, they can at least ask for a decent valuation, but at the same time, they have a thinning cash position and a mountain of debt and very weak commercial numbers compared to their competition. So hopefully the management's looking at this and saying, we got to do something here, because, I guess they can do more dilution, but it's just going to crush the share price. So, I don't know. This is the dilemma that I'm having. Do I want to, unload the position a little bit? I don't unload, but shave down the position enough to get to that house money to deal with the upcoming volatility without completely selling out and missing on a big move up? Interesting dilemma. Anyway, so let's get into Rubraca. Rubraca is a PARP inhibitor. The company's had it, on the market for a while. Is not doing well. It does great in the clinic. We'll say that. In the clinic, the data looks great. It's been very competitive there, but on the market it's just not getting. It's just not competing the competition, which I'll get into in a second. But however, the overall PARP market has not grown at the rate that the street and healthcare in general was. People were looking at, because the idea of a PARP inhibitor is great, and everybody was thinking that it was going to be, all these PARP inhibitors were just going to be billion-dollar drugs very quickly, and it's not looking like that right now. It's been a grind to get some of these other ones, which Rubraca. There's Zejula, which is now a GSK drug, which they acquired Tesaro for. Lynparza, that's an AstraZeneca and Merck drug. Pfizer has their own. Apparently Lilly's working on one. So it's crowded, and they all work very similarly. And the problem is that when even if you have competitive clinical data, when you're going up against GSK, AstraZeneca, Merck, and Pfizer, and potentially Lilly, it's just it's a knife to a gunfight type of situation with just the number and the influence. But let's go back to PARP in general. PARP inhibitors, they're targeted therapy. And they're unique in that they prevent the cancer cells from repairing. So they block the PARP enzymes, and which there's 3 of them. There's PARP 1, 2, and 3. And they block that from working, so essentially they're stopping the cancer cell, to rebuild, and then thus permitting them to perish. So PARP inhibitors have shown to be effective in a variety of cancers. You got ovarian, breast, prostate, fallopian tube, and I think pancreatic is even in there. But the main battleground is really in ovarian and prostate. So that's where most of the slugging it out to be the best. And like I said, even though Rubraca's been doing well in the clinic, they're just not really out competing the rest, which is, it kind of makes sense. Still, I mean, they're reporting, okay growth here and there. It's been a little bit up and down. It's not as explosive and consistent as most people were expecting. Hence this, sell-off for, I'll just show you. I mean, this just goes to show you. I mean, now, a lot of this was buyout rumors, but, for probably since end of 19 into 2020. I'll say here for so like the 30s, still terrible. 1/10 of the price it was a few years ago. It was kind of sad. So that's Rubraca. It's approved in the U.S. and Europe. I would say at one point it was viewed as a potential leading PARP inhibitor. Thanks again, but it's got this issue where every time there's some data, it's the Athena mono potential turnaround maybe into a rally. Every single time it just seems like there's going to be something that's going to really spark a solid turnaround, and this thing just gets shorted into oblivion. And it's just it's a very expensive thing to develop and keep pushing, expanding its label, which it needs to be competitive, but then also a company with very little money, that except for dilution and taking on debt to fund a commercial effort with a competent sales force with enough backing. It's just been a grind. So I think the writing was on the wall for them, and that's why they went with the 3B deal and coming up with this FAP 2286 efforts, which now we're getting into. Let's see if we can find it. FAP 2286. However, this data that just came out, which ASCO, is interesting. It's something that it's phase 3 data from the Athena mono. It's showing the benefits of Rubraca as a first-line maintenance treatment in advanced ovarian cancer. People who've had platinum-based chemotherapy. But the big thing is that they were showing that they're going to show a benefit regardless of their BRCA mutation or their HRD, which is homologous recombination deficiency. Those are kind of like the two ways you can kind of classify. Well, they tend to classify cancer, ovarian cancer, and the big thing here is that the other PARP drugs have had some issues depending on, which mutation it is or HRD status. So the data here, the big thing is that the data, it showed that Rubraca's progression-free survival (PFS) for all patients, so everybody regardless of where you were and what your mutation or deficiency was 20.2 months versus 9.2 in placebo. So it doubled the progression-free survival. Regardless, everybody in the trial. Well, I shouldn't say everybody, but that was including all the patients in the trial. All right. And in terms of overall response rate, again, Rubraca, I think it was 48.8% in the ITT. So, all again encompassing all patients. They were at what? Yeah, they were at 48% for their ORR. And then the placebo was 9.1. The median duration response was for the ITT was 22.1 versus 5.5 for the placebo arm. And then, in this case, it hit its primary endpoint and demonstrated it had a decent safety profile compared to their previous trials in different indications. Meaning, nobody in this trial was showing, or this population was showing worse safety, which is great. Now, the overall survival, the OS, was immature at the time of the cutoff, which makes sense. They still have events to go through. That's fine, but they're going to need to probably get that data to be a little bit more mature, because it's going to show you whether or not only is it the drug working, but is it actually helping the person live longer, which, not every single... you could have some cancer therapies that are really great at killing, and removing the cancer, but at the same time, it's also, toxic or killing shortening the life of the actual patient, which, it's great you're getting rid of cancer, but if you're killing the person, it's not really that good. So that's the big thing of finding out about the OS. It's gotta wait some extra time to see what happens there. If we look, so I guess this trial was important, or this data release was important, because it showed you, all of them were the ITT, all patients randomized ITT. It also did whether, if there was, which is probably here. So yeah, you're seeing significant improvement in PFS, both in the HRD positive and regardless. So even the ones that these different subset populations are HRD positive, regardless, and BRCA, they were seeing improvements. Which again, some of the other PARP inhibitors have had some struggles, either with one or both. So that's where Rubraca's maybe going to show an edge here when everything's all said and done, is that it can outcompete these other PARP inhibitors. And if you're a doctor, you don't have to sit here and try to figure out which one you want to do. You can just confidently grab Rubraca, and you're saying chances are the best option for you right now. So they had that, and then following the Rubraca, they had the FAP 2286. That was shortly after Rubraca data, and the initial data from the FAP 2286 was good, encouraging, because it was early data. It was showing that it's safe, it's effective. The organ dosimetry revealed that tumor uptake in a variety of different tumors, it was sustained. So it worked in a variety of tumors, and it stayed in the tumor, which is big. Obviously, and then they did have a partial response in a heavily pretreated patient in a very rare disease, which is good. So that's showing that there is some efficacy. So there's that. Again, initial safety looks good. Generally mild to moderate adverse events, which is good, and no dose-limiting toxicities were witnessed in the first two cohorts. Looking ahead, they still have the third, which is the 7.4 dose. That's the third one that still needs to be recruited, and hopefully we see some of that data towards the end of the year. The company is planning to initiate phase 2 with expansion cohorts into multiple tumor types at the end of this year. So the big thing to take home there is it looks like the company's efforts, or I guess their endeavor, it's worth it. It's worth pursuing, because It is FAP2286 is a theranostic, meaning you can do it. There's a diagnostic portion to the drug or in this treatment, and then there's a therapeutic. So you can see the cancers, but then it's treating the cancer at the same time. Kind of a new thing in a way, but not too many people taking the torch on it. And if Clovis really finds out that this is something that really works, and it's the dosing, it's not toxic, dose-limiting toxicities, you're not seeing that, and it's safe and effective after multiple doses, and it's still working after multiple doses, you got a lot of promise here. We should probably get into, let's see, we could do a quick talk on FAP in general, I guess, right? We haven't done that yet. So, yeah, let's see. All right, let's get back to here. Pipeline. That's not gonna really help us out. All right, well, I guess I'll just. Oh, no. Imaging and the third there, so there's not too much there. I'll do what I can with what I got. So targeted radionuclide therapy, TRT. It's a new class of drugs for cancer. The FAP is a prominently expressed cancer-associated fibroblast, which is a CAF. Which are found in most cancer cells or most tumors. The CAFs have a vital role in tumor activities, including being immunosuppressive. So it helps evade the immune system, and the big thing is that it helps it develop resistances to immunotherapies, such as PD-1s, PD-L1 inhibitors. So your Opdivos and Keytrudas, which are these great drugs, when they stop being useful, or they could be the tumor comes resistant to it. I don't want to say it's useful. One of the possibilities is that one of these cancer-associated fibroblasts, the CAFs, are influencing that. So if you have a high these FAP, the fibroblast proteins, they're found both in the primary and the metastatic. So that is why the target that the company's going after makes sense, because you can get that put into the body, and you're not just going to have to go after the primary. You can find the metastatic, and it's being treated with it. So, and it's found in I think it was like 15 or 16 different tumor types. So you got some pretty interesting cancers, I believe, in there. There was a lot of sarcomas. You got lung cancer, colon, bladder, head, neck was another one. Salivary gland was another one, I believe. So they're going to go after multiple tumor types in the expansion cohorts. So we'll see, what they're going to be going after and where it'll work. If they show that this thing works in 10, 15 different tumor types, that's big. It's not just going to be one. So if they're going to identify where you have cancer while they're doing it, they're already starting the treatment. Come on, beautiful. So I think the company did mention that because they're going to try to do it in combination with PD-1, PD-L1s. We'll see. I'm sure they're going to probably go after with Rubraca. It's a combination, so I don't know if it's just going to be infused with. We'll see. I'm not sure. We'll find out. Get some more information on that in the coming quarters here. So, what else do we got here? So let's talk about Sanofi, right? So we got Sanofi buyout rumors. That's okay. It's obviously gonna. I'll say this, that Clovis has been speculated, linked to numerous buyout stories before. And again, I'll go back to the monthly chart. That's some of the main reasons why we're up here. It was like talking about like $129 a share at one point. It was ridiculous, to be honest with you. And they never came to fruition. This was they were telling people that Clovis was going to be bought out even before Rubraca was got Rubraca approved in the U.S. So it's always been a takeover prospect. I think that they had it like at $3 billion at one point as the buyout price. We'll see. I don't think that's obviously. That was like I think it was like $179 a share at one point, and they had like Roche and Pfizer as the lead potential suitors. We'll see. But Sanofi, on the other hand, why all those other ones, at one point I was like, yeah, those, could be buyout. I don't know I didn't know about the valuation being worth it, but now I think with all the M&A activity, and you see all these names, Merck and everybody, it seems like everybody's doing something right now, except Sanofi. They've been pretty quiet. Now, they had a few of them last year, a few M&A deals, and it was a Cadmon, KDMN, or I think it was. Yeah, they bought those guys out last year for a few billion, I believe. But for the most part, I mean, now since this year, they haven't done anything that I'm aware of. And they've had they took Bioverativ, and then even before that, a long time ago, like a decade ago, they had Genzyme. So they made a few big moves a while ago, but they haven't really done any big moves, and they haven't done a lot of small ones. So it kind of makes sense. Also, they were when was it a few years ago? They were one of the names linked to Tesaro, which was they are the ones who developed Zejula, another PARP inhibitor that GSK eventually bought out. So the timing makes sense. The fact that they haven't been active in the M&A activity is also important, and the fact that they were once linked to, no one confirmed this, but they were once linked to another PARP potential buyer of another PARP inhibitor. And I guess the other thing would be is that out of all those names that do have PARP inhibitors, they're all big names in oncology. You don't see Sanofi in there. So I mean, there's obviously other names that could be involved. Like Roche would be another one, but Pfizer has one. They already have their own. Maybe Bristol Myers is involved. It's possible. Who knows? But then again, we don't know. We don't even know. It's the company's been rumored to be bought out next month several times over. So really can't say much right now. Not even sure if or when that's going to happen. And then probably the last big news was the RS. The shareholders voted down the 1-for-7 reverse split, so that's not happening. It wasn't really a major issue for the sake of the share price and remaining compliant with NASDAQ. So because they were down below, it was below $1, but we've been above $1 for a while, so they don't have to worry about NASDAQ compliance right now. The other issue is I don't want to say issue, but a problem with that is that it's nice because now they're not going to just jack up the share price and then dilute it. Because they want to they have an ATM, and the amount of shares they're going to allow to be offered. So if you have the ATM offering going, you want to be only using, a few shares versus hundreds of shares. So if it's still trading around $2 per share, your ATM, you're using a lot more of those in that ATM versus if the share price was higher. There you go. So there's that. That's an issue. The company, again, does need money. So there's a downside to the no reverse split. But for the short term, it's usually seen as like a victory for the shareholders, so the share price spikes a little bit. We'll see if it has any legs. That's the last big news, really, that's moved the share price in the last few weeks. Like I said, though, there are some heavy downside risks that we have to consider. Again, it has a thinning cash position. They had like $122 million at the end of last quarter. Last quarter they negative $60 million in terms of net income. About the same negative in terms of cash and operations. So we really can't expect this current cash position to last what's been printed and in the bank to last until next year. They do have an ATM, like I said, so I don't know how much is left, but that at some point that's going to run out. The other big issue is that this company has $650-something million in total debt, which, you're only pulling in $150 million a year of revenue, and that's still negative, obviously. So it's going to, even if they do pull off profitability at some point in the next 3 to 5 years, I don't know how they're getting this money. They do have some deals with for Athena in terms of getting some, funding and adding more debt. But, these guys need Rubraca to do something commercially. And, again, they can't, they're fighting against some of the heaviest hitters in the whole business. And we're years away from any of these TRT programs to really kick in. So, heap of debt, thinning cash position, it's going to weigh on the share price. It's going to really probably have an issue. Like, they're going to need successive amount of, one after another positive updates, and the buyout chatter is going to have to remain high if this doesn't get shorted again. It's just, perhaps the buyout chatter will scare them because, who knows what the buyout price would be now that they have kind of essentially validated that the TRT programs might be something, might turn into something down the road. I wouldn't want to short this stock at all. You could wake up with a $15 buyout, no joke, in a month or two, and be totally screwed. So I guess that brings us to what's my decision? What am I doing? Technically, I'm much more bullish than I am fundamentally, even though the moves and why we're moving is from fundamental updates. But the debt and the fact that this is a short seller magnet is an issue. But again, the technicals to me are starting to look pretty good. We broke out of a long-term downtrend. That's these guys. All right, breaking out. Came down. We do have a bullish divergence, so that's a good sign. And so you can see that right here, by the way. So here's the low here, right? And then we got even lower, but the RSI's rate is rising. Okay, we can see this uptrend rate coming very slowly, but it's coming up. It's rising up off. Let's put the monthly in there. And then this is one of my favorite things to see, which is a rising monthly, and then the daily RSI dropping below the rising monthly, which usually starts to signal an uptrend. Now, again, this is mostly, the move of how fast it's moving is because of updates. But the reason why we're moving up is essentially a technical. Why do I say that? Because we've had positive updates from Triton and various other things before this, and yet we got sell-offs following them, even though they were really prostate cancer updates. We were getting pretty potent updates prior to this, and we were selling off hard. So yes, the updates are fueling the rate. I guess the rate of ascent is being fueled by the fundamental these updates, but why we're rising on good data is mostly technical, in my opinion. So that's big. This section right here, a little bit of a base, hit the low, just didn't want to get any lower. We can see some nice solid volume. We chewed right through. This is a lot of volume in general. I mean, if you back out, these volume shelves sticking right out here, that's not easy for us to chew through. So now if we can get above this 330, 40 area, maybe even get above 4, you're going to start to see probably a decent move higher. So most of my sell targets sell orders are in this $4 to $5 area. That way I can get to a house money position and then just let it ride for a while. So that's where I'm at. Still long ways off. I mean, there's still a lot of overhead too. You know, this is not going to just fly, but years and years of, you know, people above here looking to be made whole. All right, is there anything else I can put? Yeah, the Keltner channel, you can see it got to the bottom on both, right? So that's another one I'd like to notice sometimes. If you can get the Keltner channel, the daily, to drop below the monthly, you see that? I mean, that's telling you that things are just way too overblown at that moment. Now, it could simply go up and grind down lower, but at that moment, it's a shot that you're going to see, a potential shot up. That might be a near-term low or long-term, or an all-time low, really. But we're above this anchored VWAP, looking good. Not too much. I don't have any clear. Yeah, it's not bad. I mean, there's not a lot going on to say in terms of uptrend raise to really draw and have a strong conviction on, but I say it looks pretty good. So that's why I'm more bullish on the fact that we have a good technical setup, and now positive news is leading to positive moves in the share price, whereas before positive turned into like sell-offs because the algorithms were like, oh, there's not a positive move, let's short it because it's got to move someplace, right? So anyway, that's where I'm gonna end this up. Thanks for listening for so long. It is going to be in the watch list probably for the next week or so. I'll throw it in here and there, just depending on technical setups, but it's something to keep an eye on. If you are not involved with it, I'm still going to keep the buy target right now around $2 per share. Any down day in the biotechs or in healthcare might bring this back down to that level. I would be willing to add more below 2, but I've got to see a strong setup. And I think that's going to have to be above. That'll have to also include the overall market setting up nicely. And the XBI is going to have to set up with that as well. Anyway, so that's what I got. That's Clovis Oncology. We'll see. This might be finally it. The pain is over. We'll see.